So if the rate cap is actually repealed, if it goes the whole distance and Parliament acts on the recommendations from the President, what will the impact be on debt holders or borrowers? So what we're likely to see is that a lot of the people who've taken up debt within this period of the rate cap will actually not suffer a rise in the interest rate, because part of the recommendations that are being tabled to the full House at the moment are that those who already have loans under the rate cap regime at a certain interest rate will not see their cost rise. However, anyone who wants to take on new debt will likely have to pay a higher interest rate. Now, this is not definitely a bad thing per se, because part of the problem during the rate cap environment was that credit was not available to the regular borrowers. So at least now, fine, the credit will cost more, but it will be more available, and this is likely to reverse the low levels of private sector credit growth that have been seen in the last 3 years. The government might also be impacted, because part of what happened during this rate cap regime is that banks, instead of lending to customers, invested their money in government bonds, which is the same as lending to the government. Because of that extra money coming in, the rates on those have reduced substantially in the last 3 years, and the government has been able to borrow at lower rates. Now, if banks begin to lend more to the private sector and reduce their government bond investments, we're likely to see the interest rate on government bonds rise, and the cost of credit for the government also rise due to that.